Okie dokie, traders. What's up? Jamie Saettele here. It is November 25th, 2015, and good afternoon to everybody. What I'm going to do today is start with talking about the dollar generally. We're going to go through majors. There are very few crosses, in other words, non-dollar crosses, that I really have a feeling that I feel like looking at right now. But there are a few, and we're going to look at some of the commodities too. For primarily for commodity currency trading purposes. So let's start though with this chart, which is probably etched in your brain, of the U.S. dollar index. U.S. dollar index being the FXCM one, and we'll look at this and the ICE. So quick recap. This was NFP, right? The breakout. After all that sideways consolidation, this breakout has so far failed and gone into a smaller sideways consolidation. So look, when we were here, I was expecting this thing to continue higher and top out up on this resistance line that had been resistance so many times before we got the bigger turn, which would be in line with the seasonality turning bearish for the dollar. Actually turned bearish this week. Okay. Instead, we've gone sideways. So let's rewind now just 1 week when we did this webinar last week, last Wednesday, and we had Fed minutes that day. Did the webinar right before the Fed minutes actually, but we had Fed minutes that day, and the thinking was that the minutes would give a reason to sell dollar, being that we were at resistance, but the support would hold and that we'd go higher to new highs. Well, support held, but we haven't really gone to new highs. We've just kind of done nothing, to be quite honest. And this thing's coiling. So which way is the direction, up or down? Well, at this point, I guess the best way to describe it at this point would be I'm fairly double-minded on the dollar at this point, meaning that I really don't have a strong market opinion at this point on the US dollar in general. Okay, there are some currencies that I like against the dollar, particularly the commodity currencies, Aussie, Kiwi, and especially CAD, as focused on recently in some of the posts. Euro and pound, yeah, I still like dollar yen higher. I obviously still like that higher. It's holding support, and the seasonal aspect of yen's pretty strong as far as dollar yen being strong into the really into December. So Euro just kind of trading out on a very short-term basis, some of those tweets that I send out. But so as you can see, it's really a mixed picture at this point with the buck. Right now, as I speak, we are smack dab literally in trading no man's zone, no man's land, if you will. Again, the resistance is higher on the long-term stuff. If we we could certainly make a thrust higher, and if we get up there, that's where I think you kind of want to turn full on dollar bear. But in the meantime, a lot of things can happen. I mean, we've come in and held support, right? So I think that you kind of have to cautiously be dollar, constructive here. Maybe not across the board, but generally speaking, okay? And even if we break this, all right, even if we break this low that we had last Wednesday, that is probably only bearish for the dollar until you get to the next support, which is like 1206, 12060 or so. Okay, so a lot of things can happen from here and still end up with the dollar up at the big resistance. Okay. So there we have it with the dollar. Okay, let's look at the ICE dollar. The ICE dollar actually made a new high today, as the euro made a new low, but not a new high for the year. Still, the resistance is very slightly higher. Okay. This has the look of some sort of an exhaustion bar on it, though, doesn't it? So remember, this is the one that we're looking at. This is the original slope going all the way back. Posted a chart on this a few days ago, back to May of last year. And here we go. That level, that upper parallel has been resistance. It's been support. Not super precise all the time, but it's been precise at times. I mean, if you scroll back just to this year, I mean, look at all these levels that bounced right off, right, in July. Okay, it was actually resistance at one point in August. So that line could end up being resistance on this index for the final hurrah, or whatever, if you will. Okay, and then when we look at the longer term picture, we've got this too. This is a weekly chart, but you know, we're going back here a decade. Slope here, okay, you had resistance, support at the low in August, August 24th, and you do have resistance up here a little higher, right? Just like the daily chart. So, you know, it's all the same type of thing here with the US dollar index and the ICE dollar index. You know, both have resistance a little higher. Whether it gets there, I don't know. You know, but if it gets there, it's the best place for a really big top. And, you know, we've seen this happen. It's been this way, the way the markets have traded at these turns, right? Everyone knows the dollar is a super crowded trade. But it kind of hangs up, just like the euro back in 2000 and last year, 2014. It's like everyone knew that the euro was, you know, screwed, but it hung up until finally May of 2014. So in any case, just be aware of the levels on those dollar indexes for their final peaks potentially. I think the gold market will help, you know, give a good indication on when that final move is at hand as well. And I'll talk about gold later. For now, we're just going to get into some of the individual pairs. So starting with dollar Swiss, and Raj right off the bat here had a dollar Swiss comment or question asking, you know, when I point out, is it right at support or not? You know, like in a post, does that mean I'm going long? I mean, sometimes it does, Raj, and sometimes it doesn't. Okay. You know, one of the problems with a service actually, so psychologically, when you are publishing market opinions, okay, and this is the God honest truth. When you're publishing market opinions, and I've found this out for some time now, but it's an adjustment period. But when you're publishing market opinions or giving ideas or, you know, whatever, it actually makes it's something you have to deal with because it makes the trading for me to be quite difficult. Because when you publish an opinion and, you know, and it's out there, you know, especially, you know, with a service, you're kind of, you hold on to like your, you know, your view, I think, longer than you would or should sometimes, because you're kind of like vested in it, right? Emotionally. You know, so as it is with the dollar, you know, when I'm publishing like dollar Swiss, right? This is the chart published over the weekend, the daily chart. We had the two slopes that we were following. The one's the Andrew slope that we had been following for a while, and you know, in the daily or in those long-term charts, we've written about the dollar Swiss and its potential bullishness for a while. In fact, even this was September 20th. I had started writing that, you know, suspicion dollar Swiss is setting up for a massive long-term advance, right? So we started talking about dollar Swiss going a lot higher just 2 weeks ago, or sorry, 2 weeks ago, 2 months ago. So we had resistance here, we had support here. Okay. Now Raj has a question. He says, if you're highlighting two zones, which one do you take? Well, you can take both of them, right? You don't have to go all in on this one entry. You can buy some here at 101.40 or 101.50, and you can wait and look to buy some at the median line. So, take a partial position. That'd be the best way to do it. I mean, the problem with trading breakouts like this is that your reward, in risk, it's a little bit more difficult, in my opinion, to get more of that immediate satisfaction, I guess, from a trade, because it typically, after you get a breakout, you tend to get consolidation sometimes, right? It's very rare that you get a breakout and it goes right in your direction. I mean, that happened with the dollar 2014, but it's more the exception, not the rule. Right now, on an observation on dollar Swiss, we actually made a new multi-year high today. Okay, this was the January high right here before SNB, and we made a new high today. You can see we traded to 102.61. Today's January high, sorry, was 102.40. So made a new high. The euro did not make a new low. So that's a divergence that I'm not sure if it means anything, but it could. So I would just be aware of that fact. So for me, Raj, to answer your question more definitively, this is old resistance, and it became resistance here, and it was support, and both these lines are here, so this is support. If we look at the best way to do it is to combine it with an objective level, like a week open price, right? And actually your week open price is 101.92. Okay, so as a trade, I mean, you could take a long basically now, which is the week open at 101.92 with a stop at 101.40, which will be under the low here from yesterday, just this week. Personally, not something that I'm going to do. I just, I'm double-minded on the dollar here. I'm not all that into trading the dollar Swiss breakout here. The better price for me would have been down here, okay, closer to 101, as we were tracking for it a couple days ago, closer to 100.60 all last week. So I'll leave it at that for now. Moving on, euro, and this is another reason why I think I'm not all that excited about an immediate, like right now, dollar Swiss position. Here's the euro. Euro, again, I highlighted that raised floor possibility on euro back on, I guess it was 2 days ago. I had a little video in the post. And what we're looking at here is yet another raised floor. Okay. So, go to the short-term chart this morning. We put up support this morning from a different line, okay, but the one that just quite simply connects the lows. It is not doing anything special here, folks, right? This is quite simply recognizing that the market has not been reaching its prior slopes support, okay, putting it in a position to potentially turn higher. And then today, just a line drawn off the lows, which is a slope in itself, okay, and that's where we ended up finding a low. So, this one, for example, short-term chart, I did buy some here, and I'm out of most of it at this because 106.38 was the week open. We came right into it, and I have a small long still with a stop at 105.60. You do have obviously the Thanksgiving holiday here in the U.S., and there is we've seen some interesting volatile price action around holidays due to liquidity events, right? The banks are closed tomorrow, obviously, and when money can't move around, the market's not going to do anything. So during the U.S. session tomorrow, nothing's going to happen. But after the U.S. session, there is a tendency sometimes for there to be some pretty big moves, okay, into Friday. So I'm not going to post an update tonight, but I'll post one tomorrow. So we have that for Friday. Okay, so this is Euro. Again, same thing I talked about in the video. If we take out this level up here, right, which is the slope resistance up here, okay, then it's up around 107. If we take that out, then I think it's time to turn more Euro bullish. Okay, that's what I'd be looking at. So there we are with Euro. Okay, if we end up getting down there, then you still could get support, I guess, at 105.20 for Euro dollar. Okay, but at this point, I'm quite simply trading short-term levels on Euro, my own account. That's it. Looking at the Euro too, remember we've got this consideration here. We've got the DAX and the Euro, and you remember it's the whole thing. The Euro is a funding currency now, so and it has been for a while. But the point is there that when the DAX sells off hard, you're going to get the Euro rally. Okay, so that's why we're going to take a look at the DAX. Pretty much at resistance at this point. The weekly chart, always good to get a bigger picture view in my opinion, but here we are. Okay, resistance is this line would have been nice if it held, it didn't, so who cares. That was just a line off 2 points. What didn't mean nearly as much as these do. Okay, you've got these upslopes, but have been resistance, the sliding parallel and the median line. Seen a lot of stuff happen here. Okay, so if there's going to be a top in the DAX at some point, then it could very well be up in this region. Okay, now we've seen this happen before up at this region where you've had tops that didn't really top like right away. They kind of went sideways for a while. So it's just not like one of those touch and go trades, right? It's not like down here at support, the market crashes into it and then reverses like hell. A little different. Just be aware of that. So that article I posted about, on last weekend about there being no reason for the euro to rally. Well, this is like probably the only reason that matters. Looking at the flows in the stock market and where there's resistance in the stock market, and the DAX is priced in euros. So if we turn down here, then there's a pretty good chance, in my opinion, that the euro rallies, and the euro's, doing some things on the short-term charts that really aren't all that bearish at this point, right? Declines have been met with support before reaching the cited support. Okay, so again, not all that negative on the euro right here. Okay, from a strategy standpoint, you'd like to see a resistance break before you kind of adopt a full bore bullish euro position. But as far as short-term trading, nothing wrong with that. Okay, as far as buying buying weakness into supports with really tight stops. It's kind of impossible to tweet stuff like that out. I tweet out when we have a level, but I'm not going to sit there and say go long here, because by the time I say that, market might have moved. If I have a 10 pip stop, the market might have already moved 10 pips or 15 pips or whatever. So not all that interested in giving out short-term trades like that. Pound dollar is an interesting case right now. Actually, you know what? Before we go to pound dollar, let's go to the S&P 500, because we just looked at the DAX. So, okay, here is the SPX 500. Again, worth taking a look at the long-term page here, because it pretty much lays out what I think at the moment. Might seem like a complete mess. Levels for turns this week, 2067, 2110. I'm not too concerned with near-term trading on SPX. I'd rather focus on when this thing, is exhausting for a major decline. I think it's probably going to be near the red upper parallel. And again, that would be at a new all-time high. All right. So Santa Claus comes in with his nice red hat and red coat and his nice white beard. And he's going to bring his Santa Claus rally, as he often does. And maybe that's when we get the high up here in resistance. Okay. Not that long ago that the world was falling apart, right? But there was only one problem. We had slope support in the way. And slope support held. We had published this chart at the time. So it did hold, and it will be revisited again. And that same slope is now the level to watch for resistance up here at all-time highs. Okay. So moving on to that daily, 2067 was the spot we were looking for, that turn on the up, and guess what the low was yesterday? It's 2068. It's close enough. 2068 half. So close enough, but point being is that this is still bullish, okay, for a run higher. Up to, near-term resistance, again, probably a little higher than 2110 now, probably closer to 2115, which is the high. And then you're talking 2125.90, and then you're pretty much at all-time highs. Okay, so still positive here on the S&P, or at least you have to be, especially after the thing falls like this yesterday and finds perfect support. All right. All right, so now we'll go to pound, and then we'll go to dollar yen and Nikkei. All right, so pound dollar, I'd like to just run away and hide from it because of some of the terrible trading that's been done on it lately, but kind of annoys me because you had the levels drawn out correctly and kind of abandoned what I usually do and don't do at these times. Never trade breakouts on pound, especially pound. But I did, and it got burned. Okay, so what now? Who cares what happened in the past? Let's focus on right now. All right, well, there actually was a buy signal on what's called TD, Tom DeMark buy signal, and that happened yesterday. It's interesting, and I'll show it to you. Okay. So these 13s are buy signals. Okay, 13, Tom DeMark, exhaustion, sequential, what have you. You may or may not be familiar with it. I'm sure you can read about it somewhere on the internet. It basically aims to find peaks and or bottoms and tops in the market. The way that the market has traded into, the pound that is, has traded into support down here. And I say support being 50.85, which is simply the low back here, right? We had 50.85 to 151 marked as support, and we did trade 51.50 the last couple days, but this is, generally speaking, it has held support. Okay, the close yesterday was 50.81, and we popped right back up above 51 right now. So this is support. Now, to give you an idea, of course, this thing doesn't always work. But when it works, it can work really well. and you can see the last couple buy signals. This wouldn't have really worked at all. Okay, in October of 2014. The one back here, this was in this year in January 2015, not actually that bad. The actual low wasn't made for a while, but you did get a good move off of it. Sell signals, a couple here, not working out really all that great, but indicating some exhaustion. This one would have worked, or did work super well back in July of 2012. Okay, in fact, it was pretty ridiculous how well that worked. Okay, so you get the idea. This one worked really well back in September of 2011. All right, so you get the idea. Point is, there is a DeMark buy signal, and more important to me, I guess, is what's the slope say? Is there any slope that would be worth looking at here on the long side? Well, kind of. You've got downtrend slopes here, okay, and those did hold up. I'm gonna take you to a different chart. Let's go to this is a chart with nothing on it, and look at that. Okay, so what's the slope that we were following like all year? It's this one right here. Oops, hold on. All right, so it was this one, right? Here's the sliding parallel from this. They need a tool in TradingView where you can just get a parallel, snap it right off. In fact, I'm going to write them and tell them that. I think it's a good idea. Okay, so we had that. Remember, we had the sliding parallel here. All right, we had there, and this was support, and then it was resistance. It was resistance the day I was stopped out. And if we do it here off this next low, here, like this was kind of today, kind of just today's action. The fact that today's an up day, I think is a pretty big deal at this point. I know it's stupid to say that one day is that big of a deal, but in this case, if we were going to collapse, you could have done so. Okay. So if this continues to stay elevated, and by the way, if you move this over here, you actually would have support a little lower, but I'm not following this one. I don't think it's a great description of slope. I've had some people ask me about this one, but this one's the one I'm sticking with because it marks many more important inflection points. So either way, this is why in the SB, the posts, the updates, short term, I've had over the last day or so, I've had in the watch list pound dollar to actually be a range trade. Okay, 50.85, 51 support. And if we wanted to scope out resistance, I actually still think that it is going to be up around 52.40 potentially. It's obviously not that in here anymore. That was where we were looking to sell earlier in the week. It would be somewhere up here now. Okay. So pound also, similar story here. I'm not all that negative on it at this point. Okay, it's still a range trade at this point. So would be fine to turn negative on pound up at 52.40, but as it is right here, right now, I think pound could actually trade higher. Okay, and we have the sliding parallel off here, but there is downtrend support here, if you will. Not all that clean. It'd be cleaner probably over here, but we do have some downtrend supports at this point. Okay, we go to a short-term chart. You can see here. Here's the euro. There's the pound. Okay, so here's a short-term chart. The median line, we're actually at it right now. And the downtrend support I'm talking about is this. You see, we just ran into it. Okay, the last couple days was below it yesterday, hit it right on the nose this morning. Yeah, it's like 6 a.m. this morning, 7 a.m. So pound's not like, it's not like pound is, you know, rallying out of the middle of nowhere off this. Okay, so it would still look higher. 51.80 is the week open. 52.40 still the sweet spot if there's going to be a bigger short at some point. We'll go to the Japanese yen and the Nikkei, and then I'm going to go to commodity currencies, which is really what I'm focused on the most at the moment. All right, so Nikkei, bullish slopes are, or I should say all slopes that are working right now are bullish. It's pretty difficult to look at this sideways trade for the last 1, 2, 3, 4, 6 days. 1, 2, 3, 4, 5, 6. Yeah, 6 days is really anything other than consolidation before it pushes higher. All right, and last night's post, I wrote similar, echoing similar sentiments as I did with the S&P, and that is, this is going to crash. Dollar yen is going to crash again. S&P is going to crash again. And the Nikkei is going to crash again. But where from? If we go to new all-time highs in the S&P 500, and I think dollar yen gets up to 124.50 or 124.30 or whatever, Nikkei might be up here. I mean, we could be close to new highs in the Nikkei. All right. So point is, there's still bullish slope here on the Nikkei, just as there is on dollar yen, just as there is on the S&P 500. All right. So don't, try to fight this too bad in a thin environment, especially. And that brings me to dollar yen. So we're long from back here, 85. We were just there just now, currently 64. We came into support. This is the daily chart, okay? Again, looking for the high up here, the 24, 40, 50 region. That is where you have the trend line from the highs in June and August. You obviously also have a whole lot of stuff that's uptrending there, if you will. Okay, and then the short-term slope that I've been showing the last day or so is this one, right? Similar story. Okay, and that you also have slope up there as well. Okay, so there's a lot of working bullish slopes in dollar yen still. Add to that seasonal aspects for yen crosses, I should say, are extremely positive into December, into the end of the year. We last year, for example, we did see an early December sell-off, and then the market went higher and finished near the highs for both dollar yen and S&Ps. But let's just look back. So this was, here you go. All right, so this was last December, right here. And really not that different. Okay, this was 11.20. Okay, sideways until 11.27, and then ripped higher into 12.8. Well, what's this, 11.18? Today's 12.25. What do you say, rip higher into 12 early December, potentially, and then maybe go sideways again? Certainly fits with the slope picture. Here's the short-term picture with dollar yen. $240, 4-hour chart. Okay, so here was that support that we got. Actually, that line right there is the week open price. Shorter terms resistance might be still up around 23.25 or so, but I am looking towards, again, 24.40s before I think about actually going short. All right. By the way, we're 22.62 right now. I'm looking for support to probably come in not that far from here, probably about 22.55 or so. Okay, got a nice run here. Let's see what the 5-minute chart looks like. Got a nice run here off the lows. A little A wave, a little B wave, a little C wave, potentially. Either way, dollar yen is supported. Okay, and it's still supported, and I am looking for it to go a little higher. All right, so there we are at that. Now let's get to commodities and commodity currencies, because these are where there's opportunity right now, in my opinion. First, we're going to look at gold. All right, gold. We all know that gold has been tanking, and the short-term picture right here is kind of interesting because it might be a triangle. If it's a triangle, typically what that means there's a chart with nothing on it, nice and clean. So typically, if it's a triangle, what that means is that you're going to get a final thrust to the downside before it rallies. You know, that would bring, in other words, that would bring an end to the decline, at least this leg of the decline that we've had from the October 15th high. Okay, so if you know what that basically what you're looking for is more or less kind of sideways for maybe a day or more, and then a final drop down into, I'd say, 1050 or so. You know, I'd be watching this line, the sliding parallel right here, and then I'd be looking for a rebound to retrace a portion of this decline, and then we could get an end of year sell-off that gets down into here. I've talked about this. I know I talked about it last week during the webinar, but the you know, the implication oftentimes for the end of year stuff is gold been going in a bear trend, so the implication is typically it sells off into the end of the year, sometimes even to the last day of the year, and then you get a big rally in January. And why that is the tax selling. Okay, it's typical, but combine it with some slope, and you end up with support down near, not far from 1,000, I should say, 1020s or so. And there's long-term slope down there as well as short-term, medium-term slope. So that's my thinking. But near-term, trading-wise, what you probably care about is, you know, consolidation here is a triangle, implication for a final thrust lower before it finds a low over the next number of days. Okay, that's where we are with gold. Crude oil. I've been looking at futures charts more recently, and here's why. Now this chart looks fine, right? But what happened, I hadn't noticed this before. They rolled over the new contract in crude oil to January a couple days ago, and what ends up happening is that it screws up the CFD chart. So like you see these lows here, it says these lows are like 43 or whatever. So if I bring in the chart for crude oil futures, it's a 4-hour chart. Okay, those lows are all the way up at 45.60. Okay, so it's like, I don't know if the rollover is not being done right, or the CFD calculation is not being done right, or whatever, but either way, I'm going to be more likely to look at this as the right level rather than the CFD. Okay, so it's a pretty big deal, actually, and because if you're looking at the CFD, you have us at horizontal resistance like now, okay, but if you're looking at the futures contract, you have resistance, it's pretty far away, right? And in this case, you can see the underside of the old trend line actually intersects up here over the next few days, whereas at the CFD, you got the same line up here, but it's well above the former lows. So, that's kind of where I'm at. This is a short-term slope that we're following here. You still could get support down here a little lower. Okay, we had a nice rip after inventories today. A lot of time that gets faded. So if we come off, still watching for support on this lower parallel before crude potentially makes a bigger run to the upside. And so we looked at the commodities. That gets us now to our commodity currencies. And we're going to start with, I guess, my favorite one, which is dollar CAD right now. So I've got dollar CAD breaking support right now. Okay. Here's a weekly chart. Next resistance, this is our golden line, golden slope for the Canadian dollar, but the next resistance wouldn't be until like 138. All right, so we could get there eventually, but trading this thing right now, I'm actually of the mind that dollar CAD, hold on, that dollar CAD is going to try to go lower. So if I get rid of this, okay, you can see this slope done well for a while. We're just on the verge now of breaking this thing. Okay, in fact, we broke it, I guess, last night. This morning, popped back above, and now here we are again. So this brings me to a subject that I want to discuss real quickly, is when do you change slopes? Okay, so here's dollar CAD, 4-hour chart, and here's the slope that we had that we've been following. Okay, the median line was resistance. I guess that was on Monday during the Saudi thing. The 4-hour close was actually resistance right there at 33.75. I had an order to short at 33.95, which was the hourly close. But you can see what's happened here today is that this line here, okay, which was support last week, actually has ended up more or less as resistance. Okay, I don't care that it popped above, by like 15 pips or something, or even less than that. What I do care is the fact that it's closed below it. So I like dollar CAD lower. Okay, I don't know if it does it while staying below here, although if you're trading based solely on this, that would be your setup, is that you'd be short now at the stop above this. So this begs the question is, do you stick with this? Because if you draw this, if you just draw a trend line, you actually have it there now. It's support now. Okay. So let's talk about that. This is a slope that's worked for so long. Okay, it's been resistance at multiple points. It was resistance on the median line here. Okay, but now you have us at a regular trend line. Well, if you take this into consideration, shorting here is probably not the greatest idea. But what we want to do is I want to see, get rid of this, I want to see if this slope ends up providing, decent support and resistance at other times. Okay, so if we go, is this precise? We go off here, that's precise. Is there a downtrend that can be drawn? There's two different ones to work with. There's this one, okay, and there's this one. Which one to follow? Neither one's all that wrong, okay? The rule is typically you do want to go with what's a little flatter, but neither is that steep at this point. All right. So knowing what we know about crude oil, and that I think it's headed higher, but allowing room for a dip, immediate bearish considerations here, are not particularly strong. All right. I'd want to see a break of this trend line. This is the slope I would trade on the downside, though. Okay, rather than the one over here. And the reason for that is the action at the median line itself. Okay. Got the trading around the median line. Okay, this 50 line was, not quite resistance on the spike higher this morning, but it's a good looking description, okay, of price action. So if there's going to be a short, in my opinion, it's going to end up being on this slope. Okay, so there's another tricky situation as far as, you broke bearish construct, but you also have the trend line, and you want to put a stop up here, okay, but since this is upward sloping, it's still possible that it ends up getting hit. All right. So, we have luckily a little Thanksgiving here tomorrow. Maybe you can sit around and think about it rather than forcing a trade on this. But I like dollar CAD lower. I've liked it lower for a while. Hasn't really done anything for a while. In fact, we're at 133 right now. That's exactly where we were after NFPs. So we're almost done with the month, and we actually are net unchanged. If we let's go to the daily chart again. So here's the daily chart. See, I have this up here because this could end up actually coming into support here too. Okay. Levels to watch, 133.63. It's the high close from Monday. That'll be a level to watch. Okay. In fact, that comes into play basically tomorrow. Okay, the rest of the week. Where I would target a short, though, is trend line down here near 30.80, maybe 31. Okay, so I like dollar CAD lower. Question is, do we, visit 33.60s? Okay, before we end up going lower, or do we just go lower now? You could see too, if dollar CAD ends up, trading down here a little bit, down towards say 32.50, okay, and then gets a pop, then you have a chance to sell the underside of the line with maybe a new bearish slope. All right, that would be kind of the ideal setup. All right, so what you're looking at here, and excuse my drawing because this is going to be really ugly, but say you end up getting, let's draw in something here. I'm going to draw in some parallels. Okay. See a nice little parallel here. I feel like you ever watched that guy on PBS back in the day. Used to paint. He'd say, "How about a little tree here?" Okay, so check this. We actually have some nice little highs on this. It's subtle, but hey, they're there. So, let's say you end up getting a, you end up getting a little sell off here. then you get a little rally up to here. Okay, that's the ideal setup. And you know what that 3330 area is in? Yes, Brian Kerr and Bob Ross. That guy's great. So that 3330 area is the weekly open price. And we see, during these times, especially when the markets really are kind of like, they're not all that directional, to be quite honest, right? Kind of sideways. The markets come back and revisit those week opens like all the time, right? In fact, a lot of times you come back to it like a couple times a week. So we hit it this morning. But if the market were to trade down a little bit here, in fact, you'd end up having, from an Elliott wave standpoint, you would actually have a setup there too. So here's like a 5-minute chart. We'll look at that. Hold on. Okay, 5-minute dollar CAD. Scroll back. This thing, it's a disaster. All right. So here's your short-term waves, okay, but logic holds. Wave 1 down, wave 2 up, irregular, kind of a 1, 2, 3, 4, 5, wave 4 up, wave 5 down, and then you look to sell the rebound back into the former fourth wave, which would be around here, 33.40, which is, again, same level, 33.40, 33.32, whatever. So this is what I'd be looking at for your ideal dollar CAD setup, okay? Spending a lot of time on dollar CAD because, well, I think there's an opportunity there. So why else, spend time on it? That's the only reason, right? So dollar CAD looks good and could look even better for a short over the next day or two. Yeah, there's Dimitrov with a good comment here actually. Hard to wrap my mind around being long the dollar on that pair, but shorting the dollar against another pair like the dollar CAD. Yeah, I mean, don't think about it too much. I know that's why. What's one reason why I don't like to look at, and I used to not look at so many crosses. A lot of people like to look at different crosses because they see the ATRs on them, and I think it kind of like they see dollar signs. But a lot of times when you look at a bunch of crosses, like you're like, oh, I'm looking at Aussie CAD and Aussie freaking Swiss and Aussie this and Kiwi that and pound whatever. You start to like see stuff and trick your mind, rather than focusing on just like maybe like $6 or $7 crosses, right? And then you can so like right now I can tell you that I like Canadian dollars. I like Kiwi dollars. I'm a little less bullish Aussie at this point based on the run. I'm still bearish yen, so I like yen crosses higher. I'm neutral euro range trading it, neutral pound range trading it. So right there, I know what I am on those things. But then if I start looking at crosses and I'm like, oh man, looks like pound yen could do this, then I'm like, oh man, should I be bullish dollar yen? But you start to play some tricks on your mind. So a lot of times I won't look at that cross unless it's just completely just has 10 things going for it. Okay. But that's a good question, a good point, I think, that Dimitrov made right there. All right, so there's dollar CAD. That's what I'm thinking. If we get down, a little lower, completed a little impulse from the high, snap back into the week open, look to sell 33.30.40. And this could take you down to 30.80s. Okay, you could have a nice drop here. Let's move on to Aussie dollar and Kiwi dollar. Aussie dollar obviously had an entry today. I think we could still actually end up getting that. This was the chart from last night. Okay, here we have this blue line is basically the support that we wanted to buy or that I'm looking to buy. Look, there's a really good look. This is a good looking Aussie bullish slope to play. okay, and probably play it up to the mid 73s. This, it might end up being this line too. That's the better one to trade. And this might be, one that is worth scaling in. Having some problems here, dragging lines. Okay, here we go. So, both these lines might be the levels to trade into. Aussie kind of double-minded on that right now as well. Just like the dollar, just at this juncture, I think the trade is to buy Aussie dips, but again, it's a matter of being precise with it. And, is that going to be 72.20 or is it going to be more like 71.90? I mean, we're talking about 30 pip difference there, but, I like buying dips on Aussie. Okay. So I wouldn't buy Aussie this second, but I would look to buy weakness from here. The weekly open price is pretty close to where we are right now, actually. I think it's 72.30. So yeah, don't mind buying dips on Aussie still. A little bit of double-mindedness, and this is going to speak to the point that I just talked about, because Euro Aussie, for example, has come into a really big support area, and it's pretty darn it's showing some things that it shows at previous turns, maybe not immediately, but over, the course of a couple of days. One was the RSI level I talked about on the daily. I think it was down at like 23. That is pretty rare. And we've seen some pretty big moves off that in the past and in the recent past. So, that could mean several things. It could mean that Aussie tanks. It could mean that Aussie doesn't do a whole lot and the euro actually rips, so that's why I also am of the mind that right now trading some of these dollar crosses, separate from each other is a good deal, like picking up euro as it comes into supports, like this morning at, 105.70 area. Okay, and then, scoping out your own Aussie entries as Aussie unfolds itself. Okay, so there we are with that. Again, can't stress this enough, but Aussie dollar, man, there's a huge test coming up here. Okay, this is like what, 73.25 or something. And just to scroll back, I mean, you can look at the golden line that we have, the golden slope, just like we have golden slope in euro, golden slope in CAD. This is the golden slope in Aussie. Okay, simply the trend line that connects the 2013 October high and goes through July highs in 2013 or 2014. Sorry. Yeah, so Dimitrov, exactly. So we've got this resistance here. Then if you extend that across these levels, you end up getting some, extraordinarily huge turns. Okay, even when the market was super sloppy earlier this year, just extending it off this spike low, you ended up getting a bunch of support off of that. You ended up getting a bunch of resistance off of the same lines in July, in August, before the puke, and even on this last run up in October. All right, so we're coming up on it again, and maybe Euro Aussie does go a little lower. Maybe it goes a little lower because maybe Aussie doesn't top until it gets up to 73.30, and then this is the area that you get bearish Aussie and bullish Euro Aussie. Okay, it's not that far away. It's like 80 pips away. But point is, if we dip down into, say, 71.90 before getting to this level, then it's a buy to take it to that level. Okay, because risk is tight. Risk is down near, it's below the Monday low, 71.59. It's the exact spot that was resistance back here on 11.13. So, Aussie's a range trade with supports at 71.90, 72.20, and resistance at 73.25 or so. All right. And that could contribute again, as we talked about, to Euro Aussie finding a low. Now let's go to Kiwi. I like Kiwi on the upside. Just like I'm more bearish dollar CAD, I'm more bullish Kiwi dollar here than I am bullish Aussie dollar. I'm willing to trade on both sides of Aussie at this point. I'm not doing that with Kiwi. Kiwi, I just want to be long. And here's the chart for Kiwi. Okay, so it's actually just this morning that former resistance was support. I tweeted this out, and then Mark said that I jinxed it because it went down like 10 pips, but I respond to you, my friend, that you jinxed the jinx. So what do you think of that? You jinxed the jinx. Double jinx. In any case, I like Kiwi higher. You can, yes, jinx squared, my friend. That is correct. All right, so we've got a head and shoulders here. Okay, inverse head and shoulders, shoulder, head, shoulder. This shoulder is pretty drawn out, so you could certainly trade back and forth here for a little bit. If you're wondering, go to a Kiwi dollar chart. This could end up being the support to buy down here, 65.40. Okay, this ends up being just a trend line. Okay, off the lows here, but want to show you. You probably already know, but where is this coming from? This upslope. Oh, by the way, this isn't just a head and shoulders here. By the way, this could be a huge head and shoulders. You could have a head and shoulders that goes like this, all the way over there. You know what the target for this thing would be? If it ends up playing out, I'd measure it off here. So 67.3, 62.3, 67. You're talking about like 72. You're talking about up here somewhere. Okay, 72.30, 72.50. Not a bad potential. And Mark says a new car. Yeah, it could be. I guess it depends what you want. So here's the slope that where we're getting this. All right, so before you get to the head and shoulders and all that stuff, the slope, there's still stuff that would be in the way. I'd expect to see some selling off on this line. This would be resistance. You can see this was resistance actually up here. But what we've got here, the parallel, this is the exact, this is what we ended up looking at, and this is what was support today actually. So you can draw it off of the extreme down here, okay? But look what happened over the last couple of days. This one, which crossed some points, was support, okay? And then if we take the same parallel, this one ended up being support, okay? It was resistance, it was support, it was resistance, it was support. So when I'm showing these things like this, and I tweet charts like this out, it's difficult again to say, well, go long here with like a stop at whatever, because down here at 64.90 or something. Because a lot of times what I'll do is I'll just go long, like right at the support, and I'll put like a 10 pip stop on it. Okay, and I might be out in like 5 seconds or 5 minutes or whatever, or I might not be out at all. And so once it, rips off of that level, okay, great. Take half off, stop sitting here 10 pips below where I got in. I have a free trade. And it's kind of like you're trading the entries, but you have an idea that that the Kiwi could trade higher. So it's like I'm trading and scalping my entry, right? And that's the trade, and that's where you're making some money, over time. You're taking some here, you're taking some there, and every once in a while you catch a runner, right? And that's when you do really well. So, you're scratching and clawing and scratching and clawing, and then, when you end up hitting one, in this case, this is one where you could really hit one because you've got, for a lot of reasons, but we've talked about the impulse higher in the posts. We've talked about, A, B, C, X, A, B, C, 7 waves down. You've talked about, we've got another rally here. This is actually a 5-wave rally. 1, 2, 3, 4, 5, extended first wave. We've got a pullback. Not sure if we try to go for another pullback or not. Okay. But either way, you have to be bullish on weakness in Kiwi dollar. I would actually just be bullish on Kiwi dollar, just like dollar CAD. Okay. Aussie dollar is one that, again, I can see trading both sides, although I wouldn't look to short until you got 73.20 or so, as mentioned, because of the resistance up there. Kiwi, I just like higher. I just like it on the upside. Especially this morning. So the way it held here. So that's what I'm thinking with all the different dollar pairs. Ali asking, did we already cover dollar CAD? I did. I looked at it. I can give you the quick summary of it. It's basically this. Like dollar CAD lower, the setup would be if we bounced around 32.50, sell some on 33.30, right? We had, as far as a clear Elliott wave count here, don't really have one. I'm not a guy that likes to look at, I like to use principles of Elliott. I hate counting like all the little waves because I think it just screws you up. If there's an obvious, like with Kiwi, for example, there's an obvious impulse higher. It's good to be bullish. Okay. There's an obvious 7 waves lower that confirms the impulse higher. There's another impulse higher, 1, 2, 3, 4, 5. So like Kiwi, for example, is clearly bullish, in my opinion. And in Elliott wave's opinion, because it's clearly rallying in 5 waves. Okay, so you would have to be bullish as long as you're above 64.20. The key is buying the right areas, and these are the slopes that we're tracking for that. Okay, there were a few questions on, there's really only one cross that I actually wanted to look at and to show you. Again, some of the cross, pound yen could be getting interesting. Okay. I don't, there's a pound yen slope to follow real quick. Again, don't see a trade there right now, but pound yen likes to make head and shoulders patterns with its pitchforks. Okay, what I mean by that is the right shoulder will come up, around the fork, the upper parallel. So this is something to follow, I think, for pound yen. But again, this could take at least several days, to materialize, and probably be looking maybe at, I don't know if you can get up there that quickly, but just kind of have in the back of your mind, I think. Well, I guess this is a 4-hour chart, so this would be by Friday. Wouldn't be that crazy for pound yen to rip all the way up here by Friday, to be honest with you. Wouldn't be that nuts. Especially with yen being in the position it's in, which I think is actually bearish, so that's bullish yen crosses. But yeah, this is what I'm following on pound yen, all right, at the moment. If you just scroll out, for example, and kind of take a broad view of this thing, it's a 4-hour chart. I mean, we're going way back. you get a sharp decline, you get this range. Okay, the market came back and took out the highs and then collapsed. Just now, we're around the year open. Okay, so it drop and then another crawl up, up into resistance would set this thing up for the short at some point. If not late this week, like Friday, then maybe early next week. Okay. Maybe that puts pound dollar up at 52.40 or something, or 51.80, and dollar yen's higher. I don't know. We'll see. Either way, thinking about this as a potential, think of this as the watch list of the watch list. Aussie Kiwi is one that is interesting. That's the only one I wanted to show you as far as cross rates are concerned. So here's the weekly chart. Now look, we probably have a roughly 2-year bottoming pattern going on with Aussie Kiwi. Okay, I mean, you can just see how this thing's bottomed. The process, huge head and shoulders, probably have a good amount of time to spend over here, range trading on Aussie Kiwi. All right. You can see long-term, look at the Kiwi crash that actually ended up finding resistance on the upper parallel. It's kind of nuts that actually happened like that. But then the median line was more or less support just like a month ago. So Aussie Kiwi is actually getting up into resistance now in the short term. Okay, you can even see it on that weekly chart. But if I pull up a short-term chart, I like to use the FXCM feed for the short-term charts just because typically I do, because they are the prices that I'll be trading anyway. But here you have, this is a bullish structure, but we are at resistance and we are pulling back from resistance. Okay, so your first spot to think about maybe support probably isn't until like down here. All right, so it's not like it's below 110, not that far away. But you've got a pretty mature advance. In any case, I'd just be aware of this level or this slope, okay, on Aussie Kiwi. And it's another reason, you're at resistance in Aussie Kiwi. And I think it fits, I guess, with I try not to do this, but it fits with the way that I'm looking at trading Aussie dollar and Kiwi dollar in their own right, in which Aussie dollar is willing to range trade it, sell it up into 73.20s or 30s, buy it into 72.20, 71.90s. In Kiwi, I'm just more outright bullish right now, just looking higher on Kiwi. Okay. But yeah, this is the slope to follow on Aussie Kiwi itself. Okay, so there could be a pretty good long on this at some point. The coming days, probably a little longer. Like to see it pull back a little bit. You've got a pretty weak momentum picture up here, kind of rolling over. RSI doesn't look all that great on the short-term picture, I don't think. At least that would be my guess. Let's see. What RSI? Yeah, okay, so you can see you've got like a pretty big divergence. You got like a double, you got big RSI here, right? Divergence here and even bigger divergence here. This is a big divergence. You got divergence at 65 or something on RSI. Okay, so would be looking a little lower here in Aussie Kiwi from these levels, but thinking about support, especially at the median line, because it was support for the last total rip to the upside. But that puts you down, pretty close to, depends when you get there, but it puts you down near 109, 130 pips lower. Okay. All right. So, I'm not going to end it yet. I was going to, but I remember there was a question. Someone wanted to look at, Mark wanted to look at Swiss yen. Swiss yen. I think that's really about it. It's an interesting pair. I like the idea, just without even looking at the pair, because yeah, longer term, I do think that dollar yen's in the topping process. Um, yeah, dude, go ahead, email me, go shoot it over. But yeah, so dollar yen is in a long-term topping process, right? Dollar Swiss is breaking out of a long-term base, so sounds like a good idea to me. Swiss yen. We'll look at a long-term picture. Well, you've got most certainly have a downtrend here, uh, to state the obvious. Okay, so let's look at, scroll out. Now let's play. Okay. See what this does. Okay. See what this does. Ooh, that might be where you want to go. Make that a shift, modified shift. In other words, it's just a trend line. We're going to see where these come in. Okay, so this is daily, and I kind of like this one. So you've actually come into support, downtrend support. So I'm going back here. This is the 8/24 high, August 24th, 9/4, September 4th, and October 20th, 10/20. That's what I'm looking at. This is support here now. This is resistance up here. Okay. What's cool is that it looks like that intersects the horizontal level at some point. It does. So the September low on Swiss yen would come into play in early December at 121.95. So there's shotgun analysis. Okay. You can see the resistance that we had. It's pretty clean, right? And you've got the horizontal level here too. And so this is more or less, you've got the same level as this. It's the same level, the April low. Okay, so that's April low from 2015 from this year. September low this year, finally broke it. How about a retest? Can I get a retest? How about a retest? So if we get a retest, and then it's off to the races, maybe. All right, so that's what I'm looking at. That's what I would be looking at with Swiss yen. Okay. Again, I don't know if this is something that I will personally end up trading. You know, I seem to trade a lot better when I'm trading with just the dollar crosses rather than looking at all these things and tying up capital in a million different trades. But more than happy to show this and do this analysis. But this is, you know, looking at this right now, I would say probably going to get some sort of a bounce, or if you're going to get a bounce, you're going to get it here. Okay, and would be looking at, you know, the sweet spot to sell up at 121.90 or so. Ali, gold, no problem, my man. So I went over gold a little bit earlier, but no problem. I'll go over that again. Okay, so really haven't done a whole lot, obviously, since probably last week's webinar. Neither is the dollar in that case. But what's good about this current situation is that the thing's starting to clear up. So big drop, a lot of times big drops end after you have a really, you know, coiled up triangle, and then you get a thrust in the direction of the trend. Okay, in this case, the trend is down, obviously. So if we go to like let's go to, you know, we'll go to 4-hour chart. Okay, so here's the 400 or 240 minute chart, 4-hour chart. Okay, this is a triangle. You can see it here. Okay, if I were to go Elliott wave, it'd be something like A, B, C, D. Maybe get another little pop in E. Okay, implication being that once we get this sell off, this you could also have this too, by the way, Ali. You could have A, B, C, D, E. In other words, you get a B wave low in the triangle. That's actually quite common. I think the textbooks call it an irregular triangle, but it's not really that irregular. It actually happens quite often. So you could be done with the triangle, in which case what that means is that we're going to get a thrust down to a new low. I'd be watching these levels for support. Okay, this parallel not far from 1060, and then this parallel down here, which is below 1050, it's about 1045. Let's do some measurements on this actually. So if I measure from the B wave, from here, that puts you down at 1044 to 1031. If I measure from here, that puts you at 1041. So 1041 sounds like the sweet spot to me. So here we go, back to the daily. I just wanted to show you that short-term 4-hour chart because I wanted to show you the triangle, because the triangle is great in that it shows you several, it doesn't just show you that you have a triangle. It tells you that you're likely to see a thrust in the direction of the trend, but then you're likely to see a reversal, okay? A reversal, risk increases, I should say. So for me, I'm looking, I'd be looking down towards that lower parallel triangle thrust, 1040, 1045, not that far away, right? We're currently at 1070. A $25 decline is really not that, big of a deal. Yes, it is a small triangle. You're absolutely right. It's a couple weeks. Okay, 1, 2, 3, 4, 5, 6, 7. It's like 8 days. Okay, it's like 8 days long, 7, 8 days long. You're right, compared to the move, but that's what I'm saying. Okay, it's not a triangle that corrects this entire move. Okay, it's a triangle. It's so like in Elliott, 1, 2, 3. Now this is 4. Okay, 4 is the triangle. One more move lower and then higher. Okay, so after we get that final low after this triangle, my expectation is that we could get all the way back to 1130. I would not be that surprised to see us get all the way back there because it's a big confluence. All right, so as this comes into focus, I'm sure I'll write about it some more on the in the posts, but this is what I'd be looking at right now. Okay, so just in summary, to give you, Ali, just a very quick summary on gold. Triangle for the last 7, 8 days. Implication is that we do trade lower, but once we make a new low, I'd look for a bottom around 1040 to 1045, specifically on this lower parallel, and then you could get a bigger rally. Okay. Just for interest's sake, I'd like to see actually where, this is the weekly chart, where does those highs from 2009 come in? It looks like it comes in, it looks like that's 1030, oh, it says 1006. Oh, this is the high from 2008. It's 1033. Anyway, I pay attention to those lower parallels, okay? 1040, 1045. Oh, excuse me for the coughing and everything. I'm kind of under weather over here. For silver, let's take a look at silver. I don't think I've done a whole lot on silver. see here. Hold on. I know I've gone silent, but I'm just thinking. This is the dominant slope that you've got on silver, okay, right here. So what we're going to do is see if any of these things actually cross any downtrending level. Look at this one right here. This is interesting. Okay. Put that over there and get rid of this. If that seems crazy that you could get all the way down there, I'd follow these. So Ali, what I would do this on your chart, okay? Draw a line on the 8/29 August 2013 and July 2014 highs, okay? You can see that line. It's very, very useful. It was resistance actually in October. And then you can see the parallels of that line are also useful. At times they've been resistance and support in both directions. And I would connect those lines off of prior peaks and lows, because that's where you're going to end up getting levels for bounces and maybe even a low. Okay. So that's what I would do, right? Or that if you're looking for specific levels for hedging purposes or trading purposes, that's what I would be doing right now. Just follow these levels. All right. Also, of course, since the gold picture is pretty clean, as far as the triangle and the levels, talking about the, down there at the 40 to 50 region in dollars. Well, I mean, 1040, 1045 or whatever. You could simply just look at that, and when gold gets down to 1040 or so, you can see where silver's doing. And if it's down here, gives you even a little more confidence you might actually be at support. Okay. All right. So there I am wrapping it up for now. Again, I will have a post out either tonight or tomorrow, but not both. Again, with Thanksgiving tomorrow in the U.S., I'm not going to write two. And also, banks are closed here tomorrow, so there's not going to be a whole lot of flowing money flow going on in the U.S. session, at least. Doesn't mean the market can't move during Asia session tomorrow or Europe tomorrow, but especially Asia tomorrow and even Friday. We've seen times, especially when you've had crowded trades going into holidays, you've seen some pretty crazy stuff happen over the years. So, I'll address that in the post if it looks like it's something worth paying attention to. But for now, to sum it up, euro trading short-term levels, dollar yen still like it higher into the top of that 124.40 region. Aussie dollar willing to trade both sides, 73.25 or so. Support 71.90, 72.20. Dollar CAD, I like it lower. Talked about the perfect setup would be a dip into 32.50 back to 33.30, then lower. Kiwi, I like it higher. Pound, similar to euro, just kind of range at this point. Wary of the raised floor on the euro, indicating potential for something to happen on the upside. All right, so that's that. Take care. And for those of you in the U.S., have a very happy Thanksgiving. And even if you're not in the U.S., happy Thanksgiving, and maybe sit down and stuff yourself full of food and drink on Thursday. All right? Okay. All right. So everyone have a great rest of your week and take care.